Morning from our global headquarters in New York. I'm Manus Graney alongside Danny Berger. You're welcome to Bloomberg Brief. I set that agenda.
Oil slumps, Brent and WTI tumble after Israel's strike on Iran avoids the nation's energy infrastructure. Political instability, the yen slides. Japan's ruling coalition loses its majority in lower house elections. And looking for fresh cash, Boeing is said to be planning a $15 billion capital raise as soon as today. Good morning, Manus. Happy Monday.
Danny, good morning. It looks as if the equity markets have got their mojo back, bouncing back. Big tech is in focus. Most of them are bid this morning. You've got Apple, Amazon, Google, Meta, Microsoft. $20 trillion worth of overall equity will report this week. It's going to be 10 days, Danny, of where economic rubber meets the political high road. You've got 5 of the Mag 7 reporting an Eli Lilly. Oil is down. Roll it over, have a look at the bond market again. We're extending our losses. Bond yields are trading higher this morning. Is it geopolitical relief as oil drops by 5%? As I say, it is going to be 10 days of where you're going to need nerves of steel to get through the PCE, the jobs report, the election, and the Fed. And then don't forget, you're also going to find out what the debt sales are in the middle of this week. So there's a lot to chow down on in that equity market. There's the oil market, Danny, on is it relief? Is that how we should read Israel's response to Iran? We'll talk about that with Bobby Ghosh later this morning.
Yeah, the bond market move is kind of a confusing one because you could say oil's moving lower and chances for inflation reinvigorated is lower. Surely bond yields would be moving in line with that. But maybe what we are seeing is the relief of geopolitical tensions. How long does that relief last? When, as you point out, it is 2 crucial weeks and we know how quickly narratives can swing. We could have a whole cycle in just this week alone. We
could have a lot of an emotional cycle. I mean, the bond refunding in itself this week can certainly pivot for us. And then you got to see what is Iran's next response. Listening to Ayatollah Khamenei's language, we'll parse that with Bobby Ghosh a little bit later on. There is one other major story, of course, it's around Japan and the yen, and it is moving hard and fast. We've heard over the weekend that Japan, the snap election, Bloomberg's Isabel Reynolds is with us from Tokyo. Isabel, this is the first time since 2009 the LDP has been denied its position in government for now.
Right, yes, that's right. It's the first time since 2009 that it's failed to reach a majority in Parliament. That's including its coalition partner, Komeito. So that leaves Prime Minister Shigeru Ishiba casting around for support from other parties, either in the form of a coalition or simply just the votes to get through to be approved as Prime Minister in Parliament and then to pass individual policies, which will be a much more fiddly way of running the government in future. Now, the main opposition parties have already said that they're not interested in joining a formal coalition, but we have just heard from the Democratic Party for the People, which is a relatively centrist party, which would fit in relatively well with Ishiba. And they have indicated that if they can get some of their policy proposals through, they might potentially be open to voting for Ishiba in the vote in Parliament just to make him Prime Minister. Now, that needs to happen within 30 days. So Ishiba sort of needs to get his skates on to get this vote through. And it leaves a lot of things sort of in limbo at the moment. I mean, he mentioned in his press conference this afternoon that he would handle things like the APEC summit and the G20 summit appropriately. So he's pointedly not saying that he's going to be there. And that raises questions about how, how Japan's going to be running its foreign policy during this period when it doesn't formally have a new prime minister in place.
Yeah, Japan usually a place of political stability, so it surprised a lot of foreign investors to not have that. Isabel, thank you. Isabel Reynolds, Bloomberg's Tokyo bureau chief. Yen this morning, as Manus mentioned, it is weaker, 153 versus the dollar, weakest in 3 months. Joining us now is Elsa Lignos, global head of FX strategy at RBC. Elsa, the market is trading this as if the uncertainty means that we'll have a less hawkish BOJ. What do you think?
I think at the margin, it maybe makes intervention a little bit less likely while we navigate the political risk. The BOJ was not expected to move this week in any case. A lot of people had pushed back the expectations for the next potential tightening into 2025. And so I think that remains unchanged. And from my perspective, it still remains very much about what the US is going to do, what US rates are doing, rather than the Japanese side.
And you make it very clear that the longs are present, but not as aggressive as they were when we hit 161.95, which was the yen's nadir. You would say that the market is only 70% long. To what extent is this going to be driven by a rejuvenation of the carry trade, as well as where you think terminal rates are in the US?
It's a great question because we have seen quite a sharp shift in dollar positioning over the past month or so, really since that September payrolls report. And it's led to a build-up in long dollar positioning across the board, but particularly against the yen and against the Swiss franc. Nowhere near as crowded a trade as it was earlier this year, as you rightly mentioned. So there is certainly room for that to build further. But I think in order to get that next leg up, you'd really need to see a swing in policy from the US, post-election, more inflationary policies, something like that, which might get the market a little bit more excited about the top side for dollar yen.
Well, so much of the strength from the dollar, Elsa, has come not just from the Trump trade, but has been the strong economic data. We're about to enter the foggy period of data where things like strikes and hurricanes affect it. And on that note, for Friday's jobs, Bloomberg Economics' Anna Wong has written this: a robust September jobs report fueled perceptions that the U.S. economy was humming along. The October jobs report could rattle that view. Bloomberg Economics expects the first negative payrolls print since December 2020. Elsa, they assume it's going to be a negative 10,000. That's not the median. The median is 110 expansion. But should we get something like that, a negative payrolls print, how does that shift the narrative?
Well, look, like you said, the median is still very much positive. Our own economists are looking for a positive print as well. But you have to discount the impact that a negative print would have because of the impact of hurricanes or anything else. But of course, if you did get a negative print, not our call, the market couldn't help but react to it and question the shift in perception around the US that's occurred over the past month. And I think where we are now, we've really come a very long way towards repricing the US exceptionalism story. So clearly there's an asymmetry to the risks around the data, and the dollar is going to be hurt far more by softer data than it benefits from stronger data. And that would be my slight concern heading both into Friday's payrolls, but also into the US election next week. We're certainly seeing clients trying to square up on risk ahead of those key risk events and go in a little bit more square so that they're not taking that outright dollar view.
When you look at the dollar's performance in this month alone, it's been the best month in 2 years. Do you sense a level of exhaustion or just a natural proclivity to de-risk?
Well, I really think, like I said, it was that repricing of the US exceptionalism story. Because if you rewind to the summer when we got those softer payroll prints and that string of slightly weaker data, there were a lot of people tripping over themselves to say the Fed's behind the curve, the US is on the brink of recession, and so the dollar suffered as a result. And, there's been a bit of debate how much of the bounce in the dollar that we've seen has been down to the Trump trade that you mentioned, or really just the US economic data. I'm a bit more in the latter camp. If you look at how the dollar's just performed across the board, almost indiscriminately against every other currency, it really feels like more of that repricing of US exceptionalism. And that's, I think, got us to where we are today, which feels fairly comfortably priced, but I feel like most of the gains for the dollar have been done on the back of the US data. If we're going to get further gains, it has to come on political developments.
I was going to say, Elsa, that goes right to the point that you've made today that I think is great. To get more dollar upside, you need a policy shift. Is Trump winning the election, is that enough to see a policy shift and a stronger dollar? What could be the reaction to that if it's not yet priced in?
Well, it's not just about Trump winning the election, but it's also about what goes on in Congress, right? Because we have various possible outcomes. And I think part of what people are struggling with is, one, what's the outcome of the election going to be? The betting markets suggest that it's quite definitely going to be a Trump victory. Polls are a little bit tighter, and certainly depending who you speak to, there isn't that much clarity. The second is when we're going to know the outcome of the election. It may well not be the day after. And the third is, even if you knew the outcome of the election, what would that mean in terms of the currency reaction? And part of the problem there is kind of anticipating, if Trump were to win, what he might do, whether he'd favor his kind of inflationary dollar positive policies or go after the kind of dollar negative policies he's sometimes espoused. From my perspective, I do think a Trump victory, particularly a Trump red sweep, is a dollar positive scenario. And so that's something that's not fully in the price here. If that were to play out, you should see that reaction. On the flip side, if you see Harris, even with split Congress, there's probably at the margin some unwinding of the dollar strength to come.
OK, well, we're certainly cutting down to a lot of event risk between now and then the Europeans will quake when it comes potentially to a new tariff policy. We didn't quite get to that. Elsa, thank you very much. We'll save that for the next time. Elsa Lignos there of RBC. There are other stories trending on your Bloomberg terminal this Monday morning. This is what we got for you. Boeing are planning to raise $15 billion from a fundraising in an offering that could help the beleaguered airplane maker boost its liquidity. Deliberations are ongoing, and details of the offering, such as the timing, could still change, according to people familiar with the matter.
Indonesia has blocked Apple from selling its iPhone 16 in the country. Officials say the company hasn't met local investment requirements. Apple does rank outside the top 6 smartphone brands for Indonesia, but still it is a potential growth market with a young, increasingly tech-savvy population.
Volkswagen workers in Germany will pause production today to join rallies about the automaker's plans for unprecedented factory closures in the country. The top Labour official says management has not presented a clear plan for the future, and executives are unwilling to take factory closures and job cuts off the table.
Coming up, oil plunges, Israel strikes military targets in Iran, avoiding oil infrastructure. We'll get into that next.
And is good news good news? We discussed with Robinhood's Stephanie Guild later this hour. Context matters on Bloomberg.
Whoever hurts us, we hurt him. And this is the principle that guided us to this day. And this is the principle that will guide us in the future as well. The attack in Iran was precise and powerful and achieved all its goals.
The Israeli Prime Minister Benjamin Netanyahu there. Brent sumps this morning after Israel strikes on Iran. Avoid the oil and the nuclear facilities in retaliation for a missile barrage earlier this month. Joining us now to break down the news and the reaction is our breaking news editor. It's Patrick Sykes. Patrick, obviously this is everything that the Americans and the allies here had guided for. Don't go after the oil infrastructure. Don't go after the nuclear infrastructure. I've got various comments here. Underwhelming and proportionate. Now, the response from the oil market seems to be, at first take, underwhelmed with the response from Israel.
That's right, yeah. I think that's a reflection of, as you say, the expectations that were right at the top end of the spectrum of potential Israeli responses. That, you know, scenarios included targeting Iranian oil export infrastructure, and then you'd have the obvious expectation of spillover where the Iranians themselves might be expected to close or limit traffic through the Strait of Hormuz. Instead, we got this apparently more measured attack, more limited attack over several provinces, though. And I think what we've seen is the premium basically since October the 1st, when we had the Iranian missile barrage against Israel. That's gone for now. So in that sense, calm for markets and I think for diplomats as well.
The risk, Patrick, in these types of situations is that you lose track of the tit for tat, that it continues to be retaliation for retaliation. And in that, mistakes are made. What do we understand for the Iranians' response and whether there will be some form of response?
Yeah, that was an interesting point of their language so far. Has been unlike in previous tits and tats, where they've been very quick to commit to a specific promise of revenge. In this case, that came quite late, and instead it was more along the lines of we reserve the right to respond, and we'll do so at a time of our choosing and in a manner of our choosing. We did have some slight more specific this morning from the foreign ministry saying that the response would itself be correspondent with the nature of the attack. But so far it's relatively muted. Iran would like to turn attention instead back to Gaza. Obviously we've got those ceasefire negotiations, hostage negotiations set to restart in the coming days. We've taken the immediate pressure off. Iran will be now hoping that some resolution of that could diffuse the wider tension in the region.
Patrick, appreciate it. That's Bloomberg's breaking news editor, Patrick Sykes. Now, over here in the U.S., there's just 8 days left until the election. VP Harris and former President Trump are making their final push to voters.
We've got 9 days. 9 days. 9 days left in one of the most consequential elections of our lifetime. We must not wake up the day after the election and have any regrets about what we could have done in these next 9 days.
We must defeat Kamala Harris and stop her radical left agenda with a landslide that is too big to rig. So you need to get out and vote.
Joining us now is Bloomberg's Akayla Gardner. Akayla, both candidates in places over the weekend that had raised many eyebrows. Just focusing on Trump for a moment. In New York City, a state that he's extremely unlikely to win, headline after headline talking about racist, sexist comments happening during his rally. What do we think Trump wanted to achieve from his event at Madison Square Garden, and did he seem to do it?
Well, of course, this is a very flashy venue. Madison Square Garden is one of the most known venues in the country. And Trump was really returning home to his home state of New York, right? And really delivering his closing message this weekend. And that is essentially, he believes that Harris, quote, broke it and he will fix it. He's specifically referring to the immigration system, the economy. He really spoke about affordability and the high prices that a lot of people are feeling. And so his argument is really leaning into the fact that a lot of voters see the economy as better and frankly, the country as in a better place when he was in office. But as you mentioned, his speech was really overshadowed by a lot of incendiary comments that came from a few lesser known speakers before he began. One who referred to Puerto Rico as an island of garbage the same day that Kamala Harris noticeably released her own plan specifically focused on Puerto Rico. And you had Harris this weekend in Pennsylvania making her push to voters there to really turn out. She spent a lot of time in Black and Latino neighborhoods. And that is a really key city for her because Joe Biden notably won. He was able to win Pennsylvania by pushing turnout higher in those cities. But she'll be making her closing argument on Tuesday, that's tomorrow, in Washington, D.C. at the National Mall, really painting Trump as a threat to democracy. She'll be speaking at the same site that he spoke on January 6, 2021, right before those rioters went to the Capitol.
Yeah, she'll be making that speech at the Ellipse. If you look at the reaction from various people on the comments about Puerto Rico, you got Bad Bunny, you got Jennifer Lopez and Ricky Martin, various people along with politicians coming out and really sort of pushing back against those comments from the comedian. If we compare and contrast, he was really emboldening his mega base last night at Madison Square Gardens, not really going beyond those guardrails. If you look at what Harris did over the weekend with Michelle Obama, along with a number of other issues that she really leaned into, which was on abortion, which was on reproductive rights, etc. In her closing argument tomorrow, we know she's behind on the economy. Where will she lean?
Well, tomorrow she's going to be leaning into this issue of democracy, really painting Trump as a threat. But that comes with its own risk. Joe Biden really focused on that as his message, and people felt that he had a message too focused on Trump and not enough focused on making an affirmative case for himself. And we've seen Harris really shift from the beginning of her campaign, which started in July, where she had this campaign that was about joyful warriors, about introducing herself. And being on the road with her, she would often pass up really obvious chances to criticize Donald Trump. That has very much changed. She's doing now regular gaggles. She's taking opportunities to draw contrast with herself. And her campaign is really leaning into some of these incendiary comments that I mentioned, especially that comment yesterday on Puerto Rico, and seeming to get the support of Bad Bunny. He did not explicitly endorse her, but he shared her Instagram video announcing her Puerto Rico plan on his own Instagram and specifically clipped a portion of that announcement where she criticized Donald Trump's past response to hurricanes.
Akayla, what does it say about this election cycle that you have two behemoth papers, the LA Times and the Washington Post, neither of them endorsing candidates?
Well, both of these decisions have drawn a lot of backlash, not only from people who work there, but also from readers on social media. But I think the major concern that people are feeling is how close these decisions were made to Election Day. So there has been backlash. As far as I know, we haven't heard Trump or Harris specifically comment on it, but there's certainly strong feelings about these two newspapers' decision.
Akayla, thank you very much. On the trail there, Akayla Gardner, as we close out 8 days to run until the election. Coming up, the Dodgers in the lead in the World Series so far, but will the team be one man short of tonight's game? We'll talk about that in just a moment.
now for your front pages, a look at what's making headlines around the world. First up in the New York Times, California Governor Gavin Newsom is proposing a $750 million in annual film tax credits that would double the current amount. That is the most generous in the nation. It comes after many executives expressed concern over the slump in film production with an industry that has been struggling to rebound. Manus.
Next up, Washington Post, Howard Lorber, CEO of Douglas Elliman, was pushed by directors to resign amid work culture concerns. The investigation examined the firm's workplace and employee accusations of sexual assaults by two former brokers. In a press release, the company said he had decided to retire.
And the Associated Press has this. Shohei Ohtani will be returning for Game 3 of the World Series following his shoulder injury. He got hurt. He was sliding into second base. You could see he was clutching his shoulder. That was to end the 7th inning of Saturday's game. Dodgers tragically lead 2-0 in the best-of-7 series. These players are so crazy to me. He hurts and dislocates his left shoulder, and the coach says it doesn't matter. He needs his right one more. He can still play. I mean, that's why. If I dislocated my shoulder, you wouldn't see me, Manus. I wouldn't do this job.
No, she would be here. She dislocated her shoulder. She actually would be here. What you want to know is that the seats are cheaper. They've come down by 38%. So get yourself out of that game.
Still like 800 something.
Yeah, small change.
From our global headquarters in New York, welcome back to Bloomberg Brief. Danny Berger and Manus Cranny, let's set your agenda.
Oil slumps, Brent and WTI tumble as Israel's strike on Iran avoids the nation's energy infrastructure. Political instability. The yen slides as Japan's ruling coalition loses its majority in the lower house elections. And looking for fresh cash, Boeing is said to be planning a $15 billion capital raise as soon as today. Danny, good morning. Happy Monday.
It is a busy week and 2 weeks ahead, and a lot can happen in that equities bid this morning. NASDAQ outperforms. We are heading into the big tech earnings season. S&P fell for the first time in 6 weeks. Meanwhile, the bond market sell-off continues. Is it just risk-on relief that there was not more of an attack on crude infrastructure by Israel? Brent crude drops some 6%. And in Japan, the yen weakening the most in 3 months. Japan's ruling coalition does not win a majority. Does that mean, with that uncertainty, a less hawkish BOJ? Manus.
Yep. Well, certainly yen is on the move, but the dollar longs are not fully locked and loaded. It is going to be a huge 10 days and a huge week for equities. Stephanie Guild is the head of investment strategy over at Robinhood. She's with us this morning. First of all, happy birthday. What a way to spend your Monday morning.
Thank you. Happy to be here.
We're in the innings of, as you say, the fourth soft landing in the United States of America. Equities have found their mojo this morning. We're facing $20 trillion worth of reporting this week. How pivotal is this week to an extension of the rally?
I think it's pivotal because I think it's what's been keeping the market going when you look across earnings, because yields have certainly not been helping.
No.
Despite the fact that we're in a soft landing, I think the market is partially recognizing that means yields cannot come down a great deal. But then we're also in an election season, and we're looking ahead to the debt ceiling becoming an issue again at the end of the year. On December 31st, it expires. So I think there's a lot of stuff in play, and good earnings are the thing that's going to kind of keep it all in check, in my opinion.
Because your base case is basically where we are right now in the S&P 500, 5,800. I know your high end is 6,000. Can you just go through your thinking? Because previously you had 6,100 as the high end. So why the change?
I just was looking at valuations and getting to be, above 22 times and thinking, there's a lot that could happen between now and the end of the year, especially looking ahead to the deficit issues, and thought there's probably going to be a little more resistance from here to the end of the year. And so I just took down that 20% probability. Not really any more than that, because I think a lot of the factors are still in play that are keeping us moving higher. But it feels like there's also more resistance as we go into the election.
It's interesting. The conversations we had last week were about the challenge of higher yields. I'm looking at 2-year notes this morning, 4.11. Julian Emmanuel said, look, the high duration, those big tech, and we've got 5 of the Mag 7 reporting this week. That longer duration kind of equity gets challenged at around 4.15. Is that what clients are worried about when they look at this portfolio of Mag 7?
I don't know if they're actually worried about that. I think they look at the underlying fundamentals much more long term and say, is this going to be, because your yields don't matter as much if you can grow out of it. And so looking at things like Tesla being a surprise last week. I think kind of a surprise because of the fact that the robotaxi event took, some expectations down. I think expectations matter a lot too, and that is one thing I'm worried about, is that earnings expectations for the top 10 are positive 30% earnings growth for Q3 and negative almost 5% for the remaining 490. And so that's what I worry about. And this is mostly driven in the top 10 by NVIDIA and Lilly. It's just those two. So it's those two secular trends of, AI, chips really, and GLP-1 drugs. And what does that mean for the rest?
Did Tesla change a lot for clients last week? The fact that you could have this stock rallying 22%, did it change sentiment, especially heading into more big tech earnings?
Our customer base, what they tend to do is trim winners. They maintain their core positions, and so that was reflected in our activity. And then you see things that provide perhaps an opportunity for the longer term. And McDonald's, for example, becomes a place that you see some capital going as a result.
We are, as you say, getting ready for a monster week of earnings. You look at the bar, you say we've come down from 11% in the second quarter to 4% in the third quarter. So any kind of disappointment here, you really are down to the margin of let's say, the real optimism being challenged, isn't it?
Yeah, in Q4, expectations for the top 10 is only 10%, and for the remaining 490 is 15% earnings growth. I mean, that's it's predicting the fact that we're going to have this broadening of a rally beyond kind of the top 10, beyond the Mag 7. And I think a lot depends on the election. I think a lot depends on yields. I mean, you're seeing yields are impacting small caps, right? You haven't had a good run recently in small caps. And the bond market, people are saying, okay, the market is starting to price in a Trump rally, but a Trump win even. But I feel like you're seeing only that in kind of the yields and less so in the market.
I was going to say, what wins out here in terms of noise? Is it earnings? Is it the economic data? We have jobs and then a Fed decision. Is it the election? Is it some terrifying combination of all three?
They all really matter. The job market will impact yields. It will impact what the Fed does. And it also just impacts sentiment. But earnings over the long term are the driver of markets. So that also matters, but rates really impact where yields or where earnings go, I should say. At least except for the top 10. I think the top 10 kind of can cruise no matter what.
You see, there's a deep secret part of me which sort of says, you maybe missed some of the big upside in some of those big top 10. A disputed election is something that will deliver more volatility. We don't know what kind of volatility, but a disputed election, something like 2000, which, as various people have said to us, is if stocks drop, is a golden opportunity.
I do think it's an opportunity because I definitely believe.
I'm not hoping for that by the way, not as a base case scenario.
Not
but everybody's
hoping
talking
for
about
it. But I think typically you see yield. It depends on who wins, but usually you see volatility rise in the summer before, which we did actually have. And then you also see, depending on who wins, volatility rise as we get closer to the election. And we haven't really seen that yet. I do think volatility is actually going to rise in the week or month or so after, and that's usually the worst returns before you kind of get back. So I would say it was an opportunity.
Before we let you go, I want to end where we start, and that's on earnings. As we get the big AI, the hyperscalers reporting, what do people care about this time around? Because before it was just the promise of AI, it turns into spend and how much of that is actually monetized. What do you think the focus will be this time?
I was going to say CapEx. I think CapEx and margins. And I think that was the one thing that you have seen from a couple of early reportings is that margins have looked a little better than expected. Yeah. And that was one of the ingredients of that soft landing is that margins are allowed to be a little bit compressed going into it because it means that the labor market stays strong.
Right. I mean, seeing earnings like Coke where they can keep raising prices, it's remarkable when we thought that wasn't happening anymore. Stephanie, thank you so much. That is Stephanie Guild of Robinhood. Okay, coming up, oil is falling. Israel strikes military targets in Iran, avoiding oil infrastructure. We're going to have the details for you next on your Bloomberg Brief.
Whoever hurts us, we hurt him. And this is the principle that guided us to this day. And this is the principle that will guide us in the future as well. The attack in Iran was precise and powerful and achieved all its goals.
Israeli Prime Minister Benjamin Netanyahu after the airstrikes against Iran, which were in response to a missile barrage earlier this month. Joining us with the latest is Bloomberg senior editor Bobby Ghosh. Bobby, should we, as the market seems to be interpreting this, interpret it as de-escalatory strikes from Israel onto Iran?
I mean, there is a quality about that old cliche about frogs being in gradually boiling water and you don't realize the water is boiling around you. This year has been remarkable. Iran has struck at Israel a couple of times. Israel has now responded directly with jet planes flying into Iran and striking. And yet oil markets seem to have taken this into their stride. Global markets in general have taken this into their stride. This is now the new normal. A year ago, if we were having this conversation of direct strikes between Iran and Israel, we would all have our heads on fire. But this just tells you how far we have come in accepting that conflict between these two countries is inevitable. This is the status quo now. Israel attacks Iran. Iran, sooner or later, there will be some kind of a strike in response. As long as both sides signal that the strikes are coming, as long as there's not a large number of casualties on either side, as long as oil installations are not affected, it seems like the world can absorb even these shocks.
Well, it shouldn't be dismissed what Israel did go after in terms of the strategic sites that it took out. There might not have been oil and it might not have been nuclear, but they were strategic and they sent a very clear message. If I look at the language from Ayatollah Khamenei, he talks about Israel's strategic miscalculation should be countered. If you look at the foreign ministry this morning, Iran will not forgo its right to respond to Israel's aggression. But do you get a sense that we're no longer at level one critical response, and we're now in some other phase, which is a de-escalatory phase, which maybe gives the opportunity to begin to talk about something substantive on ceasefire?
I'm hesitant to use the word de-escalatory. I think that for that to happen, we'd have to see real improvement, sort of real progress on the ground, whether that is with peace negotiations between Israel and Hamas, with a cessation, at least temporary, of hostilities against Hezbollah in Lebanon. So we're still very much in the rhetoric stage of this. Yes, both sides have an incentive to play down what happened over the weekend, but that does not change the real facts. As you pointed out, Manus, Israel flew jet planes thousands of miles deep into Iranian territory and destroyed missile batteries, missile factories, did some real damage. And also demonstrated, by the way, they can hit Iran wherever they want to. It was Israel's choice not to hit oil installations or nuclear installations. But the underlying message that we can strike deep into Iranian territory and inflict damage, that message has got to have gotten through to the Iranians. The trouble is, on both sides, the real risk is both sides regard this as now acceptable behavior, that they can take pot shots at each other directly and get away with it. If both sides don't come away from these exchanges of fire feeling that went too far and we should really back away, then the risk is that they will not have a disincentive to stop this kind of behavior. And that's what really concerns me. The fact that this is now the new normal, the new status quo, insert your cliche here, that's something we should be concerned about. I think it's not wise for markets to take the view that, hey, we can get by with this.
I mean, the other thing I'm kind of hearing from you, too, is just because Israel didn't strike energy facilities this time doesn't mean that they won't next time.
Exactly right. If Iran has not learned its lesson, and so far the rhetoric suggests it is not, then the next time Israel will feel obliged to up the ante. That's the risk with this sort of situation. Each side feels like it has to up the ante just a little bit, and each side figures that, oh, we can calibrate this just right, that there won't be a huge blowback. But sooner or later, somebody will make a mistake. And we are at knife's edge, and we should not get used to being in that place.
But this is the difference, which is we've become, as far as market observers, desensitized really to the scale of response. But then you look at the language from the Jordanians and you begin to understand this conflict is far from over. Bobby, thank you so much for being with us this morning. That is our senior editor there, Bobby Ghosh, tracking the very latest. Here in the U.S., we are 8 days away from the big day. The U.S. presidential election, Vice President Kamala Harris and former President Trump making their final push to the voters.
We've got 9 days. 9 days. 9 days left in one of the most consequential elections of our lifetime. We must not wake up the day after the election and have any regrets about what we could have done in these next 9 days.
We must defeat Kamala Harris and stop her radical left agenda with a landslide that is too big to rig. So you need to get out and vote.
Joining us now is our government reporter, Jack Fitzpatrick. Jack, good to have you with us. Both candidates had a busy weekend. Harris with Michelle Obama, along with Beyonce. And then last night, let's just kick off with the latest from the Trump rally. It was very much for the MAGA base. It was very much emboldening his core group of supporters. There has been a bit of blowback on some of the lines from the comedian on Puerto Rico. But if you stand back and you look at his rallying over the weekend versus Harris's rallying over the weekend, there's a striking difference between the two.
Yes, there is clearly a difference in strategy. The Trump campaign is trying to energize their supporters, trying to engage their supporters, and trying to communicate to the people who already support Trump that it is very important that they go out and vote. This was not meant to win over any key block of undecided voters. As you mentioned, they seem to have alienated Puerto Rican voters with the comments by a comedian who kind of opened for Trump, calling it a floating pile of garbage. But even among the other speakers at this, I would note that Elon Musk said that he could cut $2 trillion from the annual federal budget. That kind of comment, which by definition would mean cuts to popular entitlement programs, either Social Security or Medicare, is aimed at conservatives, aimed at people who support Trump, and not aimed at expanding the base. Harris, meanwhile, as you saw with Liz Cheney, for an example, is trying to go after at least some Republicans or independents who might consider voting for her.
Jack, we also learned over the weekend that the Washington Post wouldn't be endorsing either candidate. The reporting there has suggested that it was Jeff Bezos' call for fear of blowback. It kind of echoes what we also heard reporting around Jamie Dimon, that he wasn't publicly endorsing Harris because he was also afraid of that blowback. How does this all translate? Does it break through any of the noise that this is the kind of environment we're in right now?
It's an event that does break through the noise. The lack of an endorsement from the Washington Post as well as the Los Angeles Times, both reportedly at the behest of their owners who blocked planned editorials in favor of Harris that were written by the editorial board. It's hard to predict how that may affect the last week or so of the election. It's not something the candidates themselves have really gotten into, but anecdotally you can tell there's a bit of frustration, largely from Harris supporters, and concern about the role of billionaires in the mechanics of American electoral politics. So it's something to keep an eye on. It's something to watch and something to understand may have an effect on people's views on the election and the U.S. government.
Jack, really appreciate it. That is Bloomberg's Jack Fitzpatrick. Okay, let's get to Boeing this morning. The troubled plane maker is planning to raise more than $15 billion. Bloomberg sources tell us that they are avoiding to get a credit downgrade to junk, something it's been under threat of. Joining us now is Bloomberg's Kate Duffy. Kate, what are the details of this capital raise?
Well, Boeing really needs this capital raise in order to prevent its investment grade rating from slipping to junk, and also to fund a recovery from a 7-week-long strike that has closed its factories and stopped production in some areas of the US. And before last week, we saw, or we expected, that Boeing was going to make some kind of recovery next year. But from now, what we know, they're going to burn cash through the fourth quarter of this year and through the first part of next year as well. So on top of the financial pressure, we also have Boeing customers, which are waiting for all of these planes coming through. And that's also stunting their growth plans and their passenger outlook. So this capital raise would really give a boost to Boeing's liquidity.
Kate, good morning to you. 64% of the strikers rejected the last pay offer last week. Has there been a restart in negotiations? Is the government actively trying to bring both sides together again? What's the latest there?
Yeah, so as you said, last week they rejected the new proposed deal. This was a 35% wage increase over 4 years. They're not happy with this. The sticking point is pension. They want the pension in the contract, and that's something that Boeing is not prepared to put in there right at this minute. That's their red line. The latest update is that actually the union have had talks with the US Labour Department about restarting negotiations with Boeing. And this is really critical because Boeing is actually burning about $100 million a day because of the strike. And so it's critical for them to get back to the table and to agree a deal to go forward.
And for customers of Boeing, it continues to be pain. Haslinda Ahmed of Bloomberg caught up with the General Electric CEO, Larry Culp, and they discussed Boeing. Let's just take a listen to that.
There's a lot happening there. We'll let Kelly Ortberg and the team at Boeing talk about the schedule for the 777X. I think their last comments talked about an entry into service in 2026. We're thrilled to be the only engine under wing with our new 9X engine. I think the fact that customers are very keen to see Boeing work through the development and the certification tasks that lie ahead of them is really good news for Boeing.
Kate, this has always been the assumption. There are so many people who rely on Boeing. It's half of a global duopoly. Is this as bad as it gets for supply and delivery for Boeing?
Well, we're yet to see how bad it can get. It's got pretty bad. Ryanair, they're one of the customers of Boeing, one of Boeing's biggest customers that are still waiting for the 736 plane to come through. And ultimately, lots of other airlines are as well. You've got Southwest, Lufthansa and IAG. They're also waiting for the 777X to come through. And this has been something that they've been waiting for about 5 years now. So it's a long time. They're dealing with aging fleets, and ultimately this is costing them more because they have to go into more maintenance. So the quicker that they can get these planes, the better, but it's certainly having a knock-on effect.
Kate, thank you very much, keeping us up to date on the Boeing story right here on Bloomberg Brief. Context matters.
Get you set up for your trading week because it is a very big one. Alphabet is going to be kicking off this week's big tech earnings. That comes Tuesday after the market close. That will be followed by Microsoft and Meta on Wednesday, Apple and Amazon on Thursday. And then, Manus, we're going to be wrapping the week up with the jobs report on Friday. 110 is the average analyst estimate. The low, Manus, a negative 10,000 from Bloomberg Economics. That would be the first negative print since 2020.
Yeah, and the hot optimistic number was somewhere around 180. Once we take account of the hurricanes, once we take account of the Boeing strikes, which are continuing. Keep an eye on the bond market. Not only are you going to get $20 trillion worth of market cap reporting in equities, but you're also going to get the budget. You're also going to get the issuance requirements this week for the bond market. It's a hot bond market.
It really is. Everything is leading to higher yields, which is an issue for everyone who said that there's reinvestment risk and you should get back in. Okay, that's it for Brief Surveillance. We'll take it from here.